maybe you could just go into a little bit more broadly, like what kind of authorities does the Federal Reserve have? And I'm not sure if our whole audience knows exactly what it is, that it is like a quasi-private entity that interacts with the public sector. Could you go into a little bit of like
Yeah,
what it can
yeah,
do, what it is?
yeah. So the Fed is the central bank, which basically means that it sits at the center of the financial system. So it controls the cash supply, and it basically sets the price for borrowing. So it more directly controls interest rates to that control the rate you would pay on anything from your credit card to your mortgage to whatever. They also have the ability to buy government-backed bonds, which is basically treasury securities, which is U.S. government bonds, or mortgage-backed securities that are backed by the government.
So these are authorities that were given to the Federal Reserve by Congress, correct?
Exactly. Yeah. So I should have said the Fed is not in the Constitution. It was created by Congress in 1913, basically as a way of having sort of a central source of producing U.S. dollars and to create some stability in the money supply, because basically in a crisis you basically want to be able. I don't know. You guys are crypto fans, so this is getting into more controversial territory that you guys might not agree with. But basically, the idea behind the Fed is supposed to be that if you have someone who's sort of consciously thinking about where interest rates should be, how much cash there should be, that you avoid a situation where the credit starts to lock up because you have somebody there to step in and make it cheaper to borrow. In terms of the Fed's authorities, so all of the things that I was just talking about, the emergency programs, that's under a special authority. Some people refer to it as the 13.3 authorities because that's actually the provision of the Federal Reserve Act. And that's it's an authority that they have only in emergencies, in unusual and exigent circumstances, where they can lend to non-banks, right? Because the Fed generally lends to banks. That's how it transmits policy, is by working through banks. And
so in an emergency, the Federal Reserve would then have expanded powers to lend to things that are not banks, like AIG, and I guess Morgan Stanley during the financial crisis in 2008.
Yeah, so it's funny that you bring that up because after so the Fed did use that authority to lend to AIG. You're absolutely right. Also Bear Stearns. And but Bear Stearns was bought by JP Morgan, so it's like, yeah, anyway. And after that, in the 2010 Dodd-Frank Act, which you guys may know about, changed financial rules after the crisis, was basically Congress's response to the crisis. One of the things that they did is they actually restricted the Fed's authority to be able to lend to just one company like that, because they didn't want that to be like a backdoor.
You said just one company, as in they would be all right if the Fed were to lend to like a whole industry, but they wouldn't be all right if the Fed just picked one company.
Right. So the language in the law is that it's supposed to be broad based, and the Fed, I think, defines that as at least 5 companies in a category. And all these programs that they've set up are generally available to way more than that. They haven't set up any sort of narrowly targeted programs. So yes, the Fed has authority to lend to pretty much anyone in an emergency. Now, a caveat is, I think I mentioned earlier, for the corporate debt program, businesses have to pay a fee to participate in that facility. Other than that, generally, when the Fed lends to anybody, including non-banks, they usually have to put up collateral of some kind. So like during the crisis, when the Fed lent to AIG, this was controversial, but the Fed basically took AIG's insurance policies, right? Like totally separate from all of the interest rate stuff that was getting them into trouble. They were like, oh, meanwhile, AIG has all these like life insurance policies that are fine, that are totally different. And they took that as collateral to lend against. But yeah, so when the Fed lends, they usually take some kind of collateral. So it can be like, anything from a mortgage-backed security to, any of the other things I was talking about, like securitized small business loans. One of the other things that changed, the other thing that Congress added is that the Fed has to get Treasury sign-off for these types of programs. So I don't know whether Treasury would be involved in that decision now too, because this is new territory, right? This is the first time we've had Fed emergency programs where the Treasury has specifically authorized them and been like, yes, this is necessary.
Okay, so just to summarize what the Fed is and what it does, it basically is the only entity in the banking system, in the financial system, that can create money from nothing, and it does this by buying things, basically. So it can buy government debt, it can buy mortgage-backed securities, it can buy financial instruments, it can buy, it sounds like it can buy small business loans, and it also it can destroy money by
selling
things.
Yeah, and I will say, just to pretty much everything you said was accurate. The only thing I'll add is in normal times, the Fed only has the authority to buy government-backed bonds and technically short-term municipal debt, although it's never actually used that authority. And so all the other things that it's buying, it's doing under its emergency powers.
Okay, so actually, I wanted to ask about that because it seems like the Federal Reserve creating money in order to buy government bonds is a little bit like the government creating money in order to spend. I mean, it's just one step away from that, right?
Yeah. So it's a little bit of accounting voodoo sometimes, but the Fed always buys government bonds on the open market. They don't buy it directly from Treasury. You might have heard the term primary dealer. Basically, there's a group of institutions that is authorized to do business directly with the Treasury Department, and those are they're basically like a group of banks and brokerage firms that buy government bonds directly from Treasury at an auction, and then they sell those. And so the Fed is not someone who deals directly with the Treasury, and it's because they don't want to be seen as what you're talking about, which is basically monetizing the debt. It's just like taking U.S. government debt, borrowing, and turning it directly into money. And so instead, there's like a private sector in between. So somebody in the private sector is the one where that transaction happens. And again, it's a little hard to wrap your head around like what the difference between those two things are. But the reason why it matters is because the Fed doesn't ever want to be seen as allocating credit in any particular, like they don't want to be the ones to choose where credit goes. They just want to facilitate borrowing conditions. But the more you think about it, the more the more it makes your head hurt.
I really don't know. Like it's really hard for me to listen to all this and look into what the Federal Reserve is doing and what the government is doing and say whether it's good or bad monetary policy. What's concerning to me is like the more I learn about this, the more it just seems that everything is a shell game. Like in terms of how much money exists and whether it's flowing or not and like what goes where. And I think, given that the Fed mostly works with banks, it's a huge advantage for the banks anytime the Fed takes action because they're getting the money first before all the chips fall and like the economy is able to adjust to how much money there is. And if there's a bunch of new money for the same or less amount of services, then you'll get inflation. And like banks have the advantage of having that money first. And like everyone close to the banks has the advantage of having the money first.
Yeah, I think I would echo some of Katie's thoughts. Like just preparing for this and reading up on the Federal Reserve and stuff like that, it is kind of concerning how it's structured and how like the creation of money is structured.